Hello and welcome to Trading Hour, live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Hormuz Fatakia. Hey, Hormuz, good morning. Fresh new week, and there is some semblance of green that we are seeing after that fall that we saw last week. 2.5% gone last week, but today we're seeing gains of around 0.4%. The Nifty up around 88 points is still off the highs of the day, around 50 points from the highs of the day. But we do have a green-looking screen. Mid-caps are outperforming. We do have the banking names, which are up around 0.3%. So yes, there are some elements which are contributing to the greens as well. As I said, the high for the Nifty today was 24,791, and we are around 50 points off from those levels. In terms of contributors, we have the realty index, which is doing really well. Nifty oil and gas is doing really well. Of course, we'll talk about that specific space in greater detail. PSU banking is doing well. Nifty energy doing well. And in terms of individual names as well, we do have BEL, which is the top gainer on the Nifty right now. There is some fundamental news supporting that. Eternal is the other one. IndusInd Bank, Sun Pharma are the other stocks, to name a few, which are doing really well in trade today. From the broader market, since the mid-caps are outperforming, we have a 400-point uptick on that one. The advance decline ratio comfortably in the favor of advances as well. So let's go across to Hormuz. He's here with us as he puts the spotlight on the top movers in the broader markets. Hormuz, tell us more.
Well, there's some resemblance of green, as you mentioned, and some of the broader market names are reflective of that. You start off with Supreme Petrochem, and this 10% move is the 9th instance in the last 11 sessions that the stock has gained now. There's a similar 10% move was seen last month as well on the 18th of August. And today's move comes on the back of very strong volumes, of course. Close to 9.5 lakh shares have already been traded in the first couple of hours compared to their 20-day average of just 8,000 shares. And courtesy of this move, the stock has extended its gains in the month of September to 25%, making it the best month of the year so far for the stock. And positive returns for the stock every single year since the end of 2019, from where the stock has risen over 10x from those levels. The other one, of course, is a news flow-driven name, Vascon Engineers, after the MOU that it signed with the Adani Group. 10% higher there as well, snapped a 3-day losing streak. And it was down 10% last week, but before this 10% drop that it had, the preceding 3 weeks had seen the stock surge over 33% to hit a 52-week high. And in today's session, we have had more than 2.5 crore shares that have already been traded compared to a 20-day average volume of close to 12 lakh shares. Now, we had mentioned about Vascon Engineers just a couple of weeks ago on the 16th of September, saying that the stock is a multi-bagger from COVID lows, but still continues to remain below its IPO price. Now, another news flow-driven name is Wockhardt, and today's 9% or now 11% move, the stock has now recovered all the losses that it made on Friday and a little more, and today's volumes are already close to 60 to 65% of Friday's traded volumes. We had almost close to 25 lakh shares being traded on Friday. We've already had more than 14 lakh shares being traded on Wockhardt today. The 20-day average is just 1.5 lakh. And the stock has now crossed the important 200-day moving average level of 1470, which was a key level on the upside. And as a result, it has now yet again turned positive for 2025. And lastly, oil marketing companies doing well in today's session. MRPL seeing the biggest single-day gain in 2 months now, was up around 7.5%, has slightly cooled off, but 54 lakh shares have changed hands, 20-day average of just around 6.5 lakh. The stock above its 50-day moving average at 129 and trading at its 200-day moving average, which is at 133, and the 100-day moving average on the upside comes to levels of 135. But despite this move, the stock has been an underperformer so far. 10% lower this year, was up 11% last year, so almost nullifying what it gained in 2024, Sonal.
Okay, all right. Some interesting names there. Thank you so much, Hormuz, for bringing us that list. So those are some broader market movers. The other one that I'm focusing on is Sunteck Realty. It is buzzing in trade. There have been a lot of updates that have come by in this particular counter as well. For now, the update is they are launching an ultra-luxury project, which is under a new brand, Imancy. The gross development value here will be around 20,000 crore rupees. In terms of the launches, it is planned over next 12 months. And it will be done Nepean Sea Road, Mumbai, which will be launched in FY26 itself. And they will look at an international foray as well, Dubai Downtown, which will be in Burj Khalifa community, which is, of course, a premium location to begin with. In terms of realizations, under this brand, they look at 2.5 lakh per square feet, which is, of course, an ultra-luxury price that the company is looking at. On the back of that, the stock is higher. Of course, it has come off from the opening highs of around 5 to 6% gains. Right now, gaining around 3%. But yes, this is is an expansion that the company is doing. Of course, not under the Suntech Realty brand, but this is another brand that they're looking at for premium projects.
Oh, Burj Khalifa, that's an interesting one. Suntech Realty almost 2.75% higher, doing very well for itself. But, you know, speaking of the broader market names beyond the list that I just mentioned, Shalimar Paints has made its move higher on the list of gainers. Now, 11.5% higher on that stock is Shalimar Paints, and that has also sprung up to the highs of the day. The other stock that was in the news is Dollar Industries, and Vinny is here to take us through what is causing this up move that you are seeing on Dollar Industries today, Vinny.
Hi, good morning. So yes, Dollar Industries is surely a stock that's buzzing in trade. Now, the board has actually cleared a merger of 9 of its promoter group companies. The group companies include like some of the companies that were involved in real estate, yarn, branded arms as well, which they were focusing on. So that is all now going to be coming under Dollar Industries. This is a sort of a vertical integration. So what does it do? It boosts in terms of manufacturing. They'll see improved supply chain benefits also coming. Now, what is the amount they're paying? So right now, there's going to be a swap ratio that's going to be taking place, swap of shares. That is going to be that Dollar Industry promoters will get 29.8 lakh new shares of all this overall, and their stake will now increase to 73.6% from previous stake that was going to be was 72.2%. All of this is at an arm's length price. When you look at it in terms of other synergies, obviously boost in terms of manufacturing, supply chain efficiency, reduction in related party transaction and costs, logistic costs now will become lower as well. Faster project execution is there in terms of the pipeline. Do not forget, some of these companies, like I mentioned, they were into garment manufacturing, leggings, kurtis. That was one of the companies that was there. The other companies were in renting commercial real estate. So all of that now is going to come under Dollar Industries. And just in terms of overall better process management for the company, that is why the stock is buzzing.
Okay, all right. Yes, 2.5% higher on Dollar Industries. But the other big stock on our radar is HUL, post their Q2 FY26 update. Mangalam is here with more details.
Well, you know, for all the FMCG companies this time around, the second quarter was expected to be a washout quarter for a couple of reasons. One, large parts of the country saw, uncontrollable rains, and as a result of which there could have been a demand issue. The other part was the big announcement that came in on GST cuts. So the last few days of the quarter impacted by the transition of old price GST stocks, which will be out of the trade channels, into the new price, lower price GST stocks, which will come back in the system from the first week of October, as the companies had told us. And that exactly is what played out for HUL as well, where they said the transitory impact due to trade and channel disruption has caused the entire quarter's sales to be disrupted, and as a result of which, on a consolidated basis, this time around, their sales growth will be flat to low single digits. However, the reason why the stock is lower and hasn't recovered as much as the street expected it to, mind you, though there has been a recovery of almost 1.5% from the lows, is that the company is expecting recovery only to start in November and the disruption to continue into October. And that's not particularly good news, because in October is where you have a majority of the festive season sales coming by, with Dussehra starting this week and then Diwali 2 weeks later. So if October itself sees some disruptions, then maybe the reason for the street's optimism that there would be increased demand that will come by will wane a little bit, because recovery is likely to be seen only in November as per the company. So let's see how that pans out. But there are a lot of positive triggers for HUL and the consumption space by and large, given the GST cuts, and for HUL in particular, the leadership change too.
Significantly off the lows of the day is HUL. Mangalam, thank you for that update. To take a short break. On the other side, we put the spotlight on the crypto markets. Manisha Gupta joins in.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
On Crypto Corner today, we're going to be talking about futures and options as a segment which seems to be building when it comes to crypto markets in India as well. In the international markets, well, we've seen FNO, ETF and all that space do quite well. But for the Indian markets as well, it seems to be growing. Let's first of all take a look at the overall market scenario here. And we do understand that these numbers are via trade sources, which tell us that in 2024, the overall crypto market in India was to the tune of $2.5 billion. For 2025, that number is expected to increase up to $2.9 billion. And the estimates suggest that by the time it is 2029, we could be looking at that number almost at $5.4 billion. So it clearly seems to be growing from where we stand. And when it comes to the overall trading volumes, they have been trading at near record highs. And when you talk about the spot vis-a-vis the futures and options, it is 1:3 of a ratio, where you have seen F&O as a market continue to grow. The reason for that is that the crypto futures, they resemble the standard futures and options market, which you have in various other asset classes as well. So not a difficult market to understand. The second point is that futures allow the traders to bet on the price of trajectory of the underlying asset. So the leverage playing in that sense is much on the higher side, again, as is the case with various asset classes. Now, the reason that you have seen increase in volume here is that you're looking at not just crypto enthusiasts, but investors and retail now becoming part of this as well. High leverage, of course, is one of the reasons here. And then you also have better tax rules in this case. When it comes to crypto, remember, we deal with very, very high taxes, nearly 30% flat. And then you also have 1% TDS with no set-off for losses. This is the case when you're trading in the spot markets there. Now, contrary to this, when you're trading in F&O market, that is the futures and options market, what you can see is that when you're looking at it attracts 1% TDS only when you're closing it. But when you talk about the futures and options market, in this case, profits are classified as speculative business income. And this is taxed according to the income slab, which mostly or sometimes is below 30%, making into better profitable gains. Well, that's about Crypto Corner. But with that, let's go for a short break. Come back with more news and stock specifics on the other side.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. You're still tuned into Trading Hour, steady as it goes for the Nifty. So let's get a technical check on the markets. Nagraj Shetty is joining us from HDFC Securities for a quick technical check. Nagraj, good morning. Thank you so much for joining in. Well, Nifty is in the green, but it has come off from the highs of the day. An 80-point uptick is what we are looking at. Do you think we'll maintain these levels, or there could be some volatility throughout the trading session?
Yeah, I think market is at the oversold region after having declined sharply by for at least around 6 to 7 sessions. Nifty is showing some bounce back, showing some reversal at the lower levels, but still need to confirm at the lows. I think at the lower levels around 24,500, 400 is going to be a strong support for the market. I'm expecting from here or from lower levels, we could see some sizable bounce back.
What about specific stocks, Nagraj?
Yeah, I have 2 stocks. One is from OMC, Hindustan Petroleum. And chartically, if you see, the Hindustan Petroleum has been a constant uptrend over the last few weeks. We have seen marginal declines recently and today's sharp breakout. This all indicating the strength in the uptrend in the stock price. Currently trading around 437, one can look to buy at this point of time. And 465 is going to be the upside target in the near term. One can place a stop loss at 422. And second one is NHPC. NHPC, after the sharp downward correction, has bounced back from the lower levels around 84. Showing a higher bottom formation at this point of time around that 200-day EMA. I think overall chart pattern is showing some more upside is likely in the near term. Currently trading around 85.15, one can look to buy at this point of time. 90 is going to be the upside target, and one can place a stop loss at 82.
Okay, all right, Nagraj, thank you so much for joining in. So that is a technical check on the markets. By the way, let's talk about some broader market movers. We have MRPL, which is up 5%. Of course, oil and gas space continues to be on our radar. We'll discuss that in greater detail on our big story segment as well. Tejas Networks is the other one, which is up around 2.3%. We have Vascon Engineering, of course. Hormuz also spoke about it. Supreme Petro is up 10%. We have Sammaan Capital, which is up around 10.5%. In terms of other movers, Epigral is the one which is up 4% as we speak. We have Aarti Drugs as well, which is trading higher. Some of these stocks which are in the green, but they've also come off from the highs of the day. So that is very important to track, because even the mid-cap index, if you look at it, when we started the show, it was up around 0.7%. Now, as we speak, it is up around 0.5%. So there has been some selling across the board from the top for Nifty. There are mid-caps as well. Even Bank Nifty, for that matter, if you look at that one, it's 0.2%. 0.7% higher there. But other than that, we are seeing some of the stocks seeing fall from the highs. For instance, Hero MotoCorp is the other one, Bajaj Auto as well, Eicher Motors. So some of these auto names are the ones which are pressurizing Nifty from the highs of the day. But let's continue with the Nifty coverage. BEL is the top gainer, surging after the Indian Army issued a tender for air defense missiles. Ria joins us and tells us what the opportunity is looking like and which stocks are in focus.
Well, yes, Sonal, the Indian Army has issued the rupees 30,000 crore tender to BEL for buying the QRSAM air defense missile systems. Now, the Indian Army is going to procure around 5 to 6 regiments of this indigenously developed Anand Shastra surface-to-air missile weapon systems. And remember, back in May, shortly after Operation Sindoor, the DAC had cleared the procurement proposal for the same. Now, BEL will be the lead integrator for this project, and they are expecting execution to commence primarily from FY27 onwards. And with this order, this enhances BEL's current order book to over rupees 1 lakh crores. The order book at the end of Q1 FY26 was about rupees 75,000 crores, and the total order inflow in FY26 so far, ex of this QRSAM order, is around rupees 11,500 crores, which is already around 42% of the company's FY26 OI guidance of around 27,000 crores. Now, the company is also expecting EBITDA margins at around 27% for this fiscal, and revenue growth in the medium term is expected to be over 16%. Now, in terms of the QRSAM project, there are also some other companies that will be contributing to this. Bharat Dynamics will manufacture missiles for this project, and the expected order value for them will be around rupees 10,500 to 12,000 crores. For Apollo Microsystems, they are going to onboard the computer and complete navigation system for QRSAM. They will also be contributing to the power distribution systems for QRSAM, and also one of the critical actuation systems for this project. The expected order value for them will be around 800 to rupees 1,000 crores. The current order book of the company is around rupees 735 crores. So this is a big order for Apollo Micro as well. For Astra Micro, they will be contributing to subsystems like TR modules as well as subsystems in the missile programs. And the order value from this will be 1,800 to 2,000 crores. The current order book of the company is around 1,891 crores. Axis Cage is another company that will be contributing to this, although the nature of the exact contribution is not known yet. But the order value from QRSAM is expected to be between rupees 100 to 200 crores, and even two other companies, Data Patterns and Paris Defense, are also expected to contribute to this project.
Lots of companies, but some profit taking you're witnessing in today's session. Ria, thank you for that. You look at Data Patterns, significantly off the highs of the day. Now it's almost 110 rupees shaved off from the day's high. Same is the case with BEL as well. Among the top gainers today, yes, but that too has significantly cooled off from the highs of the day, still holding on to gains of around 2.5%. But most of the others, Apollo Micro is down 4% as well as we speak. So some defense names seeing some bit of profit booking. What has also significantly come off the highs of the day among the Nifty names is Apollo Hospitals. And starting off the day on a positive note, the stock has now gone on to hit the flat line now, and from levels of close to 7,600, that's another 100 rupees shaved off on Apollo Hospitals as well. We take a short break. We continue our conversation on the markets with George Joseph from ASK Investment Managers on the other side. $60 points off the highs of the day is the index, now below the 24,750 mark is where it stands, holding on to gains of around about 80 points, similar to where we had started the show at. But good time to get in some trends from the FNO space, especially since it is the second last day of the September FNO series. Mangalam at the FNO desk with more on this. Mangalam.
But it's very interesting, the way the markets have been moving on for a couple of reasons. One, the indices, they're bouncing back after a 6-day fall. So that was already on the cards and always on the cards because we were at oversold levels. The question is what happens from here on as we move towards important sessions ahead. The good part is that the broader markets are outperforming. So we have the mid-cap index, which is doing better than the frontline index, and the small-cap index is also in line with the frontline index itself. The stocks in focus right now because we have the Nifty IT and the Nifty Bank, both of them having the most amount of weight on the frontline index, and how they move will be important. Let's look at the heavyweights out there. HDFC Bank is fairly well bid in today's trading session. Infosys and TCS, the IT index, after having an 8% fall all of last week, is doing better at the start of this week. So those are a few hearty factors. Now the triggers to track. Tomorrow we obviously have the September series expiry. The Nifty Bank will be in focus also because the Monetary Policy Committee outcome, RBI's MPC meet outcome, is a day after that on the 1st of October. And the commentary around India-US trade deal, we've been constantly getting updates on whether the bilateral talks are in the right direction or not. So those are a couple of things we'll be watching out for. The bounce back happened. Now what? The put-call ratio, which was closer to 0.63, has now moved to 0.86. We've seen some short covering in the 24,650 call on the Nifty. Those call writers were caught on the wrong side. And now we are seeing some writing at the 24,700 put and the 24,750 put, telling you that around 24,650 to around 24,700, there will be important support for the market, even though it's off the highs. The reason why it is off the highs is because 24,800 call writers are still fairly active. 24,850 thereabouts is likely to see some sort of supply coming in on the markets after, a big fall that we've seen and some bounce. The reason why I say that is because from a technical level as well, the 50-day moving average of the Nifty comes in at 24,864. So that's an important level to watch out for. Those call writers still holding their position. But amidst all of this, a lot of sectors and stocks in focus. The oil marketing companies, they are fairly well bid today. So a lot of long positions added one day ahead of expiry on IOC, HPCL and BPCL, all of them showing big gains. And the other stock which has been buzzing right from the word go, straight through the grades, is Sanman Capital, as it's exited FNO ban. But right now, as we speak, with the activity that is underway on that stock, it is likely that it goes back into FNO ban after just a few hours of staying out of FNO ban.
Take that point, Mangalam. Thank you so much for joining us. So that's the FNO setup and markets, of course, off the highs of the day. If we look at the mid-cap index as well, that is substantially off the highs, 236 points higher, yes, but it is almost 0.3% off from the highs. And if we look at the advanced decline ratio as well, it has moved towards the decline, not in favor, but yes, there are more declining stocks now versus what we saw at the start of the show versus the advances. So yes, these lines could converge at any moment. We'll have to see which way things go now. Bank Nifty is the one which is, pulling the Nifty down. If we look at Bank Nifty currently, it is off substantially from the highs of the day as well. So that is one index which is very, very important to track, very close to the red mark. And that is one index that we'll be closely watching out for.
Mangalam mentioned HDFC Bank is very well bid for in today's session. What's not very well bid for is its unit, HDB Financial. And at the intraday lows, the stock has slipped below its IPO price of 740 rupees and currently trading just around those levels, so 2% lower on HDB Financial. But taking the conversation on the markets forward with George Joseph from ASK Investment Managers, who's joining in now. George, good morning. Thank you for joining in. Well, we are on the cusp of yet another earnings season, but the news flow ahead of the earnings season has been anything but positive. Barring autos, there have been significant headwinds from IT, from pharma. We heard from HUL on Friday, might expect a similar reaction from its peers as well. What are you anticipating from this quarter? Do you expect it to be as subdued as the first one, and then you see a recovery in the second half?
I see there is quite a lot of news flows in the immediate past what we have seen, and what we believe is that H2 should be good. This quarter should chug along, may not be very good at this point in time because a lot of GST related news flows and some disruption in the supply chain has been there. So we will see some rebound happening in the next quarter onwards. So H2 should be reasonably a good rebounding quarter is what we believe.
We've been talking about how markets are oversold last week, but that trend seems to continue. There's still some fall from the highs of the day. George, what do you make of other fundamentals apart from earnings? Is there anything which could be a trigger for the markets from here on?
Yeah, a lot of triggers. If you see the rate cuts have happened, if you see from 6.5% repo rate has moved to 5.5%, 400 basis point overall rate cuts have happened. CRR cut of 100 basis points, and then you saw the GST cut and the benefits coming through for various sectors, and also we are seeing the tariff noise is at the peak. That also will mellow down over a period of time. So maybe a couple of months from now, the news flows will be significantly different compared to what it is today. So 50% tariff hike on India, and it is one of the highest in the entire emerging markets, and so on and so forth. Those news flows also will be behind. So what we are believing is that the worst of negative news flows in the near term is already there. And you will see the earnings rebound and the GDP rebound. Already the GDP is in a decent shape in terms of growth rates. We'll see the earnings also start rebounding from next quarter onwards. Net, what we think is that from valuation point of view, the large caps look very interesting, and it is probably trading marginally below the 10-year average. And when you look at mid and small cap space, that's where a little bit of pessimism from my side is there. When we look at many stocks and sectors are trading at maybe 2-decade high valuation. So that's where probably the earnings expectations have gone north of much what was needed. Whereas large cap, many companies, we see there is a big opportunity to make money in the next 3 years.
George, the one pocket that was holding up the market so far before this fall began was the auto space. And this was after the GST rationalization was announced. Stocks moved up 15%, 20%. We heard from the companies as well that the first day of Navratri was very encouraging. But the bottom line being that the first half has been a complete washout for these companies. And so would this 8-9 day sale be enough to justify the kind of moves that you've seen in these auto names? Because most of the larger names, be it Maruti, Eicher, all continue to trade at or near record high levels.
So these are all structurally good businesses which you can own from the next many years perspective. And we are still, if you look at from the auto volumes perspective, there are changes happening in the technology from the ICE engines to EV and so on and so forth. But nevertheless, Indian demographics clearly suggest that there is a significant room for these sectors to do well. So auto, pharma, FMCG, IT, and banking historically has been a good space to hunt for ideas from a structural growth point of view. But at the same time, right now, from the context of US market situation, US economic situation, we believe that this particular sector, more domestic-oriented sectors like auto, banking, looks extremely attractive from the next 3-year perspective to hunt for ideas and make money. The valuations probably has caught up in many cases, and that has been the case for across the board in the market. But in the case of the GST benefits coming in this sector very clearly, I believe next 12 months the eye will be on the GST beneficiaries. So auto is one among them. Therefore, there's a good opportunity to look to make decent returns in these names in the next 12 months.
All right, so Bank Nifty is in the red right now. There's a sharp fall at the day's low. We've been talking about enough triggers for the market to see those higher levels. But for now, it is a sharp fall from the highs. Even the Nifty just at the flat line with some positive bias. But yes, a majority of those losses are coming in from Bank Nifty. We do have some of these names which are at the day's low. Kotak Mahindra Bank, there is Axis Bank. You do have Reliance Industries, which is at the day's low as well. Tech Mahindra, some of these IT names not contributing too much. So Tech Mahindra is at the day's low as well. Hero MotoCorp, Maruti, Suzuki, Bajaj Auto. We were discussing how autos could be a big beneficiary of the entire GST cut phenomenon that is taking place. But yes, after that stellar up move that we've seen in some of these names, some profit booking is something which is par for the course.
Just not any strength at higher levels for the index or for the Nifty Bank for that matter, because the Nifty Bank had closed below that 54,500 mark last week. We saw some rebound from those levels, but yet again, the Nifty Bank failing to sustain above that 54,500 mark as well. George, pleasure having you. Thank you so much for sparing time and joining us today. Looking forward to having you more often on the platform. George Joseph there of ASK. The market, though, given up almost all the gains in the Nifty. The Nifty Bank already in the red. Take a short break. The big story on the other side. Stay tuned. Welcome back. On to the big story of the day, and that has to be comments from the Ministry of Petroleum and Natural Gas. Sonal is here with that big story. Some interesting comments there from the Petroleum Minister. Higher valuations for these companies.
Yes, that's the biggest takeaway. And PSUs usually don't trade at premium valuations, and that's exactly what the Petroleum Minister spoke about as well. In his meeting with the analysts, he spoke about how they're pitching for higher valuation for PSU companies, and they are also talking about less interventions coming in terms of policy, and that is something which would focus more on profitability. It'll be more about EBITDA, capex quality and value unlocking as well. They also reaffirmed their stable energy pricing policy. This is something they've spoken about a lot of times, and they reaffirm that yes, prices will be stable going forward as well. On windfall taxes, they say their future policy does not have any windfall taxes on crude oil prices or crude oil producers and even refineries. This is not something which will be there even if prices are very volatile. They have also spoken about performance-linked incentive for the managements of these companies. They say managements will also get 15% remuneration, which is linked to profitability, which is related to shareholder returns versus profitability as well. So this will be in addition to that to ensure that shareholders also get higher returns. India's crude sourcing, of course, is focused on efficiency and economics. This is, of course, in relation to Russian crude sourcing, which has been a discount, but now that discount has also come off.
Yeah, discount has also come off. But, Sonal, the focal point of these OMCs has always been A, the dividend yield for them, and then the valuation. So what are the valuations currently projecting for these oil marketing companies?
Oh, yes, dividend yield definitely one of the reasons why shareholders look at these stocks, because in the past it has been around 7 to 8% for most of these names. But specifically about valuations, because that's what the minister spoke about, let's take a look. I have taken 5 stocks from this list, majorly OMCs, because that is where there has been a lot of fear as well. For ONGC, FY27 6.8, which is in line with its 5-year average. We have Indian Oil, which is higher than the 5-year average at 9.6 times. BPCL is lower than the 5-year average. The 5-year average was also higher because there were these talks of divestment of BPCL, and that is what drove the prices higher as well for this particular stock. For GAIL as well, it is higher. The tariff, upcoming tariff for the pipelines is something that the street is watching out for very closely. HPL as well, a lot happened there. Demerger of their lubricants business. They spoke about higher capacity additions as well, and that's why the FY27 earnings, or in terms of valuations, it is higher than the last 5-year average for this particular name. But if we talk about the Nifty Oil and Gas Index as a whole, the market capitalization here is 30.23 lakh crore rupees, and it is trading at a PE of 11.8 times, which is still, as a whole, 15 companies still on the lower side. It, of course, has some private companies as well. We have Castrol here, we have Gulf Oil here. So these stocks also considered under that, and they have seen a return of 15% over the last 10 years.
Interesting. Most of these names, barring BPCL, trading around or above their 5-year average. But the other buzzword in this is value unlocking. What kind of potential lies there?
Value unlocking has been on the agenda from the word goes. If we talk about previous announcements that the company or the ministry has made as well, first was on their pipeline InvITs. So both GAIL and IOCL both have pipelines. So they had spoken about some InvITs to come by. For GAIL, of course, it's the natural gas pipeline they are looking to monetize via InvITs, and IOCL to monetize crude oil and petroleum pipeline, because these are the major products there. For HPCL, of course, it was the demerger of their lubricants business, which could have listed later, but there's no idea on that one. Recently, GAIL spoke about demerger and listing of GAIL Gas as well, which is their city gas distribution arm. But generally also none of these unlocking measures have materialized so far. And Jeffrey says that such spin-offs and demergers would definitely unlock value for shareholders. So this is something that the government should keep focusing on. This is something which will drive value.
Plenty of such proposals, but yet to see the light of the day. But Jeffrey's mentioning that that could be positive as well. Sonal, thank you for putting that in the spotlight. And that was our big story of the day, the spotlight on the oil marketing companies doing very well for themselves in today's session, be it HPCL, BPCL, Indian Oil, MRPL is doing well for itself as well. So good going for a lot of these oil marketing companies. By the way, look at the fall on the mid-cap index now from the highs of the day, 550 points lower. The index too has now slipped below the 24,650 mark, 150 points off the highs of the day. On the Nifty, the mid-cap index has turned negative. The Nifty has turned negative as well. Absolutely no conviction or strength at higher levels. That intraday recovery that we had seen has been sold into very, very swiftly. And the principal contributor to that has been the Nifty Bank. And that was the contributor towards that 1,000-point rally as well that the Nifty had seen, and now instrumental in pulling the index lower as well. Take a short break. On the other side, it's our special segment Under the Lens. And the stock in focus in that is going to be IRM Energy. More on that on the other side. Welcome back onto our special segment Under the Lens, and Sonal has hopped across to the wall to put the spotlight on IRM Energy. Sonal.
Thank you so much for that. Well, yes, let's talk about IRM Energy. The stock has been on quite a run, up almost 33% just this month when the markets last week did not do so well. But here's the catch. It's still below its October 2023 listing price of 477. So what's the business for this company? IRM is into city gas distribution with networks in Punjab, Daman and Diu and Tamil Nadu as well. It supplies natural gas to factories, shops, households and even autos. The numbers tell you the story. In Q1 of FY26, revenues were 262 crore rupees. Last year, which is in FY25, they made 975 crore rupees, pretty much flat compared to FY24. The bigger issue is margins, which have slid sharply from a high of 37% in FY22 to 17% in FY24, and now around the 10% mark in FY25 and Q1 as well. That shows in profits too. PAT is down from 128 crores in FY22 to just 45 crore rupees last year and 14 crores in the latest quarter. The company though is guiding for better times. They expect EBITDA per unit to rise to 5.25 to 5.5 this year, which compares with around 4.6 which they saw in FY25. Plus, they plan to roll out 50 new CNG stations in FY26, which should help volumes as well. There's also regulatory tailwind. Number of zones for pipeline tariffs is being cut from 3 to 2. That's a big plus for IRM because they say 70% of their volumes move to a cheaper zone, which means meaningful cost savings. But investors aren't ignoring the concerns, particularly a 2% royalty payment to IRM Trust, which brokerages like HDFC Securities believe will continue as per the license. That's an extra cost hanging over earnings. Now on to the valuations. IRM trades at around 17 times FY26 earnings. That is in line with IGL also, which trades around 16 times. But it is cheaper than Gujarat Gas, but it is more expensive than MGL, which trades at 9 times. The real gap is in returns. IRM's ROE is only 5.2%, while peers are comfortably in the mid-teens. So yes, the stock has got momentum, but the real test will be whether IRM can lift margins back up and improve returns versus the peers, because it's a subjective market, right? That's what the market will be watching before it gives the company a higher multiple going forward.
Another name in the list of recent outperformers but trading below their IPO price, IRM Energy, our special segment Under the Lens. Sonal, thank you for that deep dive on the stock. The Nifty off the highs of the day at the flat line. The broader markets too have seen a sharper fall from the highs of the day, and that is courtesy the Nifty Bank. We take your leave on this edition of Trading Hour from Sonal and me. Thank you for watching. Halftime report on the other side.